the likelihood is that rates are going to go higher, not lower. And they also understand that there's going to have to be another mass printing, whether they call it QE or not, it doesn't matter. But there's going to be another global mass printing. And the problem with that is that debases the currencies, and that lowers the value of the unbacked currencies. If the values are lower, then you got to give more of dollars or euros or yen or whatever for that same ounce of gold or the same ounce of silver. So I think they're looking at it pragmatically and saying, yeah, the day of, buying and holding bonds is over. And that's why they're recommending half of that bond position be liquidated and put into gold. The only problem with that is if everybody did that, you'd have gold at probably, who knows, $2 million an ounce. Just, pick a number, but it's going to be super, super high. That brings me to a topic I want to talk about. In silver, I've been an advocate of junk silver as the best form to own in the United States. Roughly 14 dimes equals an ounce. So you've got 14 transactions. It's the smallest denomination. It's U.S. Mint lineage. It really can't be counterfeited because it's got to show scruffiness. I mean, these were in people's pockets. And we've got an anomaly going on right now where if you're looking to sell junk silver, you're looking at $3.50, $4 under spot. And if you're looking to buy junk silver, you can buy it at spot, maybe 50 cents over spot. It's the cheapest form that you can buy right now. So if you're buying silver, you definitely want to buy junk silver. It's the cheapest and it's the best. And if you're worried because the bid is below spot, and it's well below spot, pretty much everything else is very close to spot or even eagles or above spot, understand what has happened. We finally got back to this $50 level, and we stayed here. We've been here for, call it a month, but we're approaching it. And literally, I'm not going to say the only form or the only way to buy silver in the late 1970s, early 1980s was junk, but that was by far and away the primary form of silver to buy. So what you've seen over the last few months is that many of these people who have held on for 40 plus years have turned seller, and the dealers and the wholesalers got overwhelmed with the selling. So what did they do? They lowered the price, and if they're, call it $4 under spot, that's 8% below spot. And what they're doing is they're sending those coins into refiners to melt them down, and they pick up that 8% is what they're doing. That said, this is a short-term event because the supply is already, the supply of junk being sold is already starting to dry up. And when it does dry up and prices start to normalize, guess what? There's way less junk available that still exists because it's been melted down. And I'm gonna say right here that I think when all is said and done, junk silver is going to become the most expensive form of silver in the United States, even priced higher than eagles. And I say this because I believe the supply is being destroyed on a daily basis.
The backlog that then occurred at some of these refiners that then currently made it.
Yeah, there's a backlog. I mean, the amount of junk that has been turned in for sale has been huge, and it has backlogged the refiners. This will pass, and when it does pass, I think, like I said, I think junk will end up being the highest priced silver in North America.
Let me tell you something, folks. There's a quiet opportunity in the silver market right now that almost nobody's talking about, and it's sitting right there in your local coin shop, hiding in plain sight. It's what we old-timers call junk silver. And I say junk with a smirk because there's nothing junky about it at all. These are 90% silver dimes, quarters, and half dollars that circulated before 1965. Coins that your grandparents probably used to buy a soda or a pack of gum. They've been in people's pockets, they've been scuffed, worn, and nicked, and that's exactly what makes them beautiful. Now, I've been an advocate for junk silver for a long time. I've said it on stage, on podcasts, and at conferences. If you're an American looking for the best, most practical form of silver to own, it's junk silver. And I'll tell you why. First, it's fractional. Roughly 14 dimes equals 1 ounce of silver. That means you've got 14 transactions per ounce. Try doing that with a 100-ounce bar when you just want to buy a loaf of bread after the next banking holiday. Junk silver gives you flexibility. It's barter ready. Second, it's U.S. mint lineage. This is official U.S. currency. It's recognized everywhere. You don't need to convince anyone it's real, and you don't need an assay report to prove its purity. And third, maybe most important, it's almost impossible to counterfeit effectively. Why? Because these coins are circulated, they're worn down, and they've got decades of natural scruffiness. A counterfeiter could make a shiny fake Morgan dollar, but nobody's out there faking a 1962 Roosevelt dime with a scratch on it and gum stuck to the rim. It's the most trustable silver form in circulation, period. Now here's where things get wild. Right now, junk silver is actually the cheapest form of silver you can buy. I know that sounds insane, because for years it's traded at a premium over spot. But look at the market today. If you go to sell junk silver, you're going to get maybe $3 or $4 under spot. But if you're buying, you can get it at spot, maybe 50 cents over. That's an anomaly, a short-term distortion caused by panic selling and dealer overstocking. So, what's happening? Let me explain. We finally broke that $50 level in silver, or hovered just under it, and stayed there for a good while. That triggered something interesting. Remember, the last time silver was near $50 was back in 1980 when the Hunt brothers tried to corner the market. And back then, the primary form of silver people were buying wasn't bars or rounds. It was junk. It was all anyone could find. So fast forward 40 years. A lot of those same folks, old-timers who've been sitting on those bags of dimes and quarters since Reagan's first term, finally saw their chance to cash out. They've been waiting for decades to get back to even. So what happens when tens of thousands of people all decide to sell at once? The wholesalers get overwhelmed. Dealers are buried in bags of coins. Refiners can't keep up. And when supply floods in like that, prices fall, not because silver's less valuable, but because there's too much of that specific form of silver hitting the market at once. So you've got this temporary situation where junk silver trades below spot. Now, some people look at that and say, oh, that means junk's no good anymore. Wrong. What it means is we've just been handed one of the best buying opportunities in a generation. Because when this glut clears, and it's already starting to clear, there will be far less junk silver left in existence. Let me explain why that matters. When dealers are sitting on too much junk silver, what do? They don't store it forever. They melt it. They send it to refiners who strip out the 90% silver, pour it into bars, and sell those bars back into the wholesale market. And in doing that, they destroy the coins forever. The US isn't minting any more pre-65 dimes, folks. What's gone is gone. Every Roosevelt dime that goes into a melting pot reduces the total junk silver supply forever. So we're watching a self-destruct mechanism unfold. Short-term pressure from selling leads to long-term scarcity. That's the setup for a price reversal. Once the refiners finish processing these melt orders, once the dealers run out of the cheap stuff, prices will normalize, and then they'll overshoot.
The paper markets were the tail on the dog, but the tail constantly wagged the dog because they would overwhelm the physical markets with paper. The problem now is they've done it for so long and to such a grand extent that now there's a question whether these paper contracts are going to be able to deliver. And the answer I think you're going to find in the next month to 3 months, we're going to find out that no, the paper markets are not a substitute for real physical because they have to deliver real physical that does not exist. The bottom line is all of the futures, options, paper products, etc., they're all based off of the physical metal in the first place anyway. That's why they're called derivatives. They're derivatives of the actual product. There's not as much concern. There's concern. I mean, if gold doesn't deliver, the system dies anyway. But if gold doesn't deliver, it's not a direct effect on production, if you will. Silver is used in so many different applications, whether it be industrial, technological, medicinal. I just did an interview, was talking about every time they shoot a Tomahawk missile, there goes a monster box. You can't make a Tomahawk missile without roughly 500 ounces of silver. So silver will have profound ramifications to the real world, to the real economy. Now, that said, if silver goes failure to deliver or gold goes failure to deliver, you're stuck in the casino, because the casino will close. And when the casino closes, and we've talked about this, for the last, year and a half, maybe even 2 years, we've talked about the great taking. Once the casino closes and banks and brokers and insurance companies start going belly up, they're going to take your capital with them. And that's why it's so important to get your capital out of the system into something, gold and silver, that cannot bankrupt, and in a place where it can't be taken from you. Going back to visit the late 2019 episode, that was just before COVID, and the repo rates spiked to 10%, and the Fed was having to put $100+ billion into that market every single night so it could clear. Then conveniently along came COVID, and two things happened. The real economy worldwide was definitely stunted or shut down, whatever you want to call it. There was less demand for credit because of COVID, and it allowed central banks all over the world to flood the markets with liquidity. Problem solved. Not solved, but the can was kicked down the road. Here we are again. We're nowhere near where we were in October of 2019, but the overnight rates are starting to move higher again. It's a concern and should be watched. Again, everything, whether it be the real economy, production, consumption, transit, and also the financial world, the financial economy, everything runs on credit. If credit gets disrupted or credit ceases anywhere, it'll shut the whole system down. We have interest rates still at basically generational lows. I mean, we're not where we were 3 or 4 years ago. We're not at 0% rates, but rates are extremely low. There's no risk premium in interest rates at all.
So let's dig a little deeper into this idea of junk becoming premium, because it ties into something much bigger: the transformation of silver from an overlooked asset into a strategic lifeline. You see, these coins aren't just metal. They're a bridge between a collapsing paper economy and a tangible future. Let's start with the numbers. As of this year, the US Mint hasn't produced a single ounce of 90% silver coinage in nearly 6 decades. The total estimated remaining supply of junk silver in the United States is less than 3 billion ounces, and that's being generous. If even 10% of that has been melted down in the past few months due to this dealer backlog, that's hundreds of millions of ounces gone forever. Now put that in perspective. The US government used to have a stockpile of over 2 billion ounces of silver. By the 1980s, they'd sold it all. Today, that reserve is zero. Meanwhile, industrial demand has exploded. Solar panels, medical devices, electric vehicles, and 5G infrastructure are devouring more silver than ever. The Silver Institute just confirmed another record deficit year, meaning global demand exceeds mine supply for the 7th year in a row. So we've got a shrinking supply, rising industrial use, and now we're melting down our monetary history. This is not just a blip, it's the prelude to a revaluation. Now I can hear the skeptics. Bill, silver's been manipulated for decades. Why should now be any different? And you're right. Silver has been the most suppressed asset on the planet. For 50 years, the paper markets have treated silver like a toy, a lever for leverage junkies in London and New York. But the system's breaking. The leverage is maxed out. The paper claims outnumber the real ounces by 300 to 1. You can only counterfeit reality for so long before physics steps in. Here's the truth. The suppression isn't infinite, it's self-destructive. Every time they short the paper market, it drains more physical from the system. Every comics delivery, every industrial withdrawal tightens the noose. And now we're seeing what happens when real-world shortages collide with fake-world pricing. That's why junk silver is so special right now, because it's outside that system. There's no counterparty risk, no margin call, no algorithmic suppression. It's metal in hand, no middleman. I want you to imagine a future where the monetary system resets. Maybe the dollar devalues, maybe a digital CBDC replaces it. When that happens, all that wealth in your brokerage account will get repriced overnight. Bonds will get haircut, currencies will be repegged. But that little bag of dimes in your safe, it doesn't care. It'll still buy food, energy, labor, just like it did in 1964. That's why I keep calling junk silver the ultimate insurance policy. It's not an investment, it's a lifeboat. When the Titanic of debt sinks, and make no mistake, it's taking on water fast, you'll be glad you have a seat. Now let's zoom out for a minute. Look at what's happening globally. The US just reclassified silver as a critical mineral. China is restricting silver exports starting in 2026. India is remonetizing it as collateral. Russia's central bank is buying it for reserves. Folks, this is the sound of governments quietly admitting what we've been shouting for years. Silver is money. And here's the punchline. While the big players scramble to lock in supply, the average American can still buy constitutional silver at spot. That window won't stay open long. There's a great quote from a trader friend of mine who's been in metals for 40 years. He said, "Bill, the day silver gets priced like it should, they'll change the rules." And he's right. They'll close the exchanges, they'll freeze trading, they'll roll contracts to cash settlement. That's how the paper world will end. But you can't freeze what's already in your possession. Let's talk psychology again, because this part matters. People underestimate silver because it's cheap. They think, how valuable can it be if it's only $50 an ounce? That's the same logic people used when Bitcoin was $200 or gold was $300. Cheap isn't the same as undervalued. Cheap means opportunity. And junk silver specifically has one more advantage that most stackers overlook. It's spendable. When gold hits $10,000 an ounce, how are you making change? You're not cutting slivers off your maple leaf. You're using dimes. A $2 loaf of bread might cost you 2 pre-65 quarters. That's real-world liquidity. Now here's a story for you. During the 1979 to 1980 silver spike, I knew a guy, a mechanic from Texas, who kept a coffee can of junk silver in his garage. While everyone else was chasing the Hunt Brothers contracts and losing their shirts when the market crashed, he walked into a coin shop, sold a handful of dimes, and paid off his truck. The dealer looked at him and said, "You know, you could have made more trading futures." The mechanic laughed and said, "Yeah, but I'd rather sleep at night." That's what junk silver does. It lets you sleep. And if you think that sounds quaint or old-fashioned, ask yourself why billionaires are doing the same thing on a larger scale. Why are institutions pulling physical metal out of the COMEX? Why are sovereign nations buying bullion instead of bonds? Because they know the paper game is ending. So here's my prediction. Once this current wave of selling ends, once the refiners clear their backlog, junk silver will dry up, premiums will surge, supply will vanish, and the people who laughed at the term junk will wish they had some. I wouldn't be surprised to see a $10 or $12 premium per ounce within 2 years, simply because the surviving supply will be collector-level scarce. And here's the beautiful irony. You'll have the last laugh holding what everyone else ignored. Let me end on this thought. We're living in a world that's forgotten what real money is. We've replaced soundness with speed, production with speculation, and value with vanity. But deep down, people know. When everything else fails, they'll reach for something tangible, something honest. And that, my friends, is silver. Not the paper kind, not the futures contract, but the kind that jingles in your hand and still smells faintly of history. That's why I say, don't wait for Wall Street's approval. Don't wait for CNBC to tell you silver's breaking out. The breakout is already here. You just can't see it on a chart. It's happening in the refiners, in the coin shops, in the disappearing bags of dimes being melted by the ton. The writing's on the wall, and it's stamped 1964. So stack while you still can, because someday soon, when people realize there's no junk left, those old coins will be worth their weight, and then some, not just in silver, but in sanity.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.